Pet Nutrition, Cargill Protein North America, and others. I want to say that Mark McAllister is a small town kid from Kansas. He has one of the best LinkedIn summary statements I've ever seen. He believes the best way to impact the world is to build robust local communities, and the best way to build those communities is through economic development, leveraging startups. He has a business degree from Washburn University. Thanks for joining us, Mark. We've also got with us Larry Taylor. He's a St. Louis-based co-founder and managing partner at Yield Lab Asia Pacific. He has 40 plus years of experience establishing agricultural and technological businesses in Asian markets. Larry was previously founder, president, and principal consultant at, is it Asiatics? Asiatics LLC, which he ran for 20 plus years, providing local insight to international companies. Larry also was an adjunct professor of Asian business at St. Louis University and has a degree in agriculture and economics from Cornell University. Larry, thanks for joining us. Let's start out talking broadly about ag tech investment and the landscape. It sounds like it's not pretty. Mark, let's start with you. What kind of forecasts are you seeing from the big strategic companies?
Yeah, it's I've heard it termed as a bloodbath, unfortunately. I think we've seen just a massive reduction from the peak in 2021. I think what's interesting is if you look at the 10-year trend, we probably started out at about 10 billion investment in the early 2000s that probably reached roughly on average 20 billion by the end of the decade. And then when you drop interest rates to zero, you increase risk capital and everything gets inflated on the private market side, which is certainly what we saw in 2021. What I think is interesting of the reduction, so 2021 was roughly 50 billion, that reduced to 34 in 2022.
Wait, 50 billion of what?
Into total investment into agri-food tech.
Okay,
so the industry at large. And then you saw that reduced last year down to 15 billion. So we've halved twice in the last 2 years, which is obviously concerning from the startup ecosystem perspective, because that would signal we're going to see a pretty high attrition rate on the startup side, which I think is generally true.
Let me just make sure I got that right. You said in 2021, 50 billion into agri-food tech, and in 2023, 15.
That's correct.
Wow. Okay.
What I think is interesting about that stat, obviously alarm bells are going off and they should be. What's interesting is the two highest hyped categories in 2021 were controlled environment agriculture and then also alternative proteins. And that actually accounted for 40% of that 50 billion. And you've obviously seen a massive retraction in both of those categories. So I think if we take a look at this past year, adjusted for macro trends, I think we're seeing much more of a reversion to the mean than anything else. So I think there's actually a lot of key takeaways within that. But you asked specifically about the strategic side. Obviously, with plug and play, we work with a number of those, have touch points with a number of those on the ag side. It's a rough time to be in manufacturing. I think you've seen most of your equipment manufacturers in ag forecast either flat or negative growth, which is concerning because that means they're not making any acquisitions. And I think for the startup side, none of those folks are gonna buy or roll up any of that technology now when they can buy it at a fire sale here in maybe 3-4 quarters. So I think from an acquisition standpoint, we'll see fewer exits. What's interesting about ag, and the reason I say it's important to highlight the reversion to the mean above else, is if you talk to a couple of the Midwest VCs are on the call here today. But if you talk to any of the historical ag investors, they'll tell you that most of ag didn't buy hype in 2021. And the data point that supports that is your early stage valuations have actually continued to trickle up over the last 3 years.
Can you explain that? You said most of ag didn't buy hype. What is
most of the ag investors or the institutional ag VCs didn't buy most of the hype during the 2021, 2022.
So are you saying ag investors are smarter than other investors?
I am. And I think as an asset class, most of those dollars, of those hype dollars, didn't enter most of those categories. And the data point to me that suggests that is both our portfolio and the fact that early stage valuations within ag tech specifically have continued to stabilize over the last couple of years. And again, that says to me that we're still buying at consistent prices. and we never inflated the valuations on that side. So I think as an ag investor, yes, it's a rough time on the startup side where I think we'll continue to see attrition on the companies that were funded over the last 3 years that probably shouldn't have been. But from a valuation standpoint, I think this is where you'll see what we look for as early stage investors, which is centralization of talent. There's a surplus of talent in the startup ecosystem currently, and will be as more of these companies, both the larger tech companies and down through the ecosystem, continue to shrink their employee base. That obviously provides a surplus, and the goal is to get a group of those really talented folks on a single team and get them a great technology and help them commercialize. So I think it's still a tremendous opportunity for early stage investors like myself, despite the fact that we've seen a tremendous reduction of investment in the space.
Okay, Larry's job is not just to nod, jump in.
Okay, so I agree with all of that. We pulled some numbers that the bloodbath that Mark referred to, it goes on in different locations, so it's different stages and also different verticals, and so you can't paint the industry with one brush. So, for instance, the number of companies that get funding by stage cuts in half at every stage. And we looked at one database that has 37,000, and we track 3,000 AgTech, and the situation is the same. If you've got 1,000 at Series A, at Series B it's 500, and Series C it's 250. And what's interesting is in the ag space, it's about $15 billion that's being invested at each stage. It's just going into fewer companies, which makes sense. And so there was this as the investor market got nervous, where companies were investing is they were going back. So the big pools of money were going into their favorite funds, and the funds were going to their favorite portfolio companies. So if you were new to the merry-go-round, it was really tough. If you were in there and you were performing well, then you actually were in the sweet spot. Unless you were in those aforementioned areas like controlled environment or alternative proteins, where the sort of fashion investing went out of fashion, and so that's why it's you don't want to be looking at being in the in fashion side. And what's important about this Five Lakes approach is that we can identify new ways, new technologies very early on, and I think that's going to be the savior, because Kathleen, your question was couched in terms of what's the interests of big ag, of the strategics, and frankly the general consensus is the big ag is not coming up with the inventions that are going to fill their pipeline. They're going to have to come from the likes of us sitting around this table to identify it and help these technologies through the valley of death. And I think that this is mission critical here, because ultimately those companies need to stay in business. They need to fill their pipeline. The demand on the other end is for something that is more ecologically friendly. And it's going to have higher performance than is just, I'll give you another Me Too sort of improvement. It's going to have to be significant improvement, and so we've got a lot of work to do, but they are going to need those technologies.
I just want to say, because I think we cut off the beginning, we're talking with Mark McAllister, who's a venture associate for AgTech and Animal Health at Plug and Play Tech Center, and that was just Larry Taylor, St. Louis-based co-founder and managing partner at Yield Lab Asia Pacific. Let's talk about we've kind of talked about what it's like right now for these early seed and early stage companies. It's tough. What should they do? Well, how do they get the attention of venture capitalists, and how do they get funded?
Mark, go ahead.
I was looking for Larry. Great technology and great founders will survive any environment. This has been historically true over the last 2 to 3 decades. I think the fundamentals of a successful startup remain the same regardless of macroeconomic environments. And it may be harder for us as investors to find those, or for those companies to find us as investors. But again, the fundamentals remain the same. Find a really efficient team, lower your burn, get fit as fast as possible, reduce your spend, find a technology that and implement it in a market that doesn't have that, and find commercialization partners. We're obviously going to continue to develop that, as that's kind of our end of the ecosystem. But I think what I've seen over the last 6 months in all of this environment is there are still tremendous founders who find ways to survive for 2 years on 300K and still have the level of traction that deserves investment with that kind of spend. They're few and far between, maybe farther between than they were several years ago. They may be harder to identify. I think it's our job as investors to sharpen our pencils on that front. But I think the fundamentals remain the same regardless of the macro.
Yeah, I'll add a couple to that. I agree with that. I'll add a couple more. Oftentimes I find that the technology is coming to this type of conversation with not a lot of understanding of how the technology can create value. And there'll be a page on the pitch deck that tries to answer that question, and they usually got it wrong. And so I think that there's not enough understanding of what the actual end user is looking for in the environment that they work in. So understanding how the value is created, I think, is important to figure out and be able to explain succinctly. Another thing I'll add is that a lot of times technologies have been told, yeah, you're wonderful, and they come to the table thinking this technology alone is a solution, and it's not. It's going to have to fit together. And so I think there's a lot of systems thinking that needs to be included into how they understand that they're going to go to market. I'll add a couple of don'ts. I think that there's an awful lot of Me Too out there. Me Too in terms of technology, Me Too in terms of the incremental performance, and that's not gonna work. Doesn't mean give up. It means you've got a lead. You're onto something. But it's this is, I mean, and I've been doing this for a long time. And what's interesting is that all these smart people got their degrees from professors who all got their degrees from professors. And so there's this cascade of how the technology is invented, and it's built on the previous technologies. But what that means is there's a mad dash to the patent office where they're all coming in the door at the same time with pretty much the same thing. And so I think there's an opportunity, and all of them are wanting to knock on the door of big ag to get their exit, and they're trying to get those relationships built too early. It's probably a mistake. So what these companies that are similar need to do is to find a way to coalesce around a big opportunity. I know that's hard to do because I'd rather do my thing than your thing, but I think that is the way that we'll sort out so that the money can go to the companies that can make a difference, rather than trying to divide a very small amount of money across a very large number of contenders.
So
I'll share a quick story to kind of highlight that point. I was having a conversation with one of the seed distributors yesterday here in Kansas, and they've worked over the years to put together kind of it's less an accelerator, more like an innovation day where they'll bring in new technologies, kind of highlight what's going on the seed side or the input side to their farmer network. And what they had happen over the last couple of years is there's a particular story where they brought in an interesting company and they pitched, and the farmers seemed interested, and one of their farmers went to the CEO of the distribution company and said, like, stop bringing these in, just tell me what to plant and when to plant it, and tell me what to put on the crop and when to put it on the crop. Like, don't explain the technology to me. Just let me sit in the tractor and you do the rest. And what I think most of the technological developers in the ag side don't understand is you have to build the relationships with the local agronomists. That's your go-to-market strategy. And unless you have most of that figured out, or some of those relationships in place early on, it's going to be really hard to differentiate yourself. Because most farmers, if you talk to them today, most growers in the Midwest don't care about $2 an acre savings. They just want to know what the agronomist says, and what his recommendations are. And I think it's gonna be a little bit before most of the ag tech development ecosystem, the startup ecosystem, really understands that relationship. And again, back to fundamentals of a really great company, the companies that are succeeding have that figured out from the very beginning, and then just pair a really great relationship network with a really great technology, and that's kind of the secret sauce in ag, if you ask me.
That went really fast. We're out of time. I can't believe how fast that went. You guys were awesome. We're going to have you back because that went way too fast. But we now are moving to networking, and Tammy has set up the networking rooms, and we have a university-only networking room and an investor-only networking room. Jump into the rooms. We have a moderator for each. Feel free to come and go in the rooms. It's very casual. And I just want to say the moderator for the university only networking room is Zane Gernhardt, Executive Director of the North Dakota State University Research Foundation. And the topic he wants to get to sooner or later is engaging non-ag faculty in food and ag innovation efforts. The investor-only networking room moderator is Alan Dines, Executive Advisor at Whisk Partners, who also used to be at University of Wisconsin, so he can kind of view it from both sides. And I don't know what his topic is, but he'll tell you when you get there. Thanks so much, you guys. It was awesome. Have fun in the networking rooms.